Good morning and welcome to Charting the Markets on Monday, the 27th of November 2023. Asian markets all declined overnight, and that was on the back of Chinese data. Basically, profits for the year, industrial profits were down to 7.8% from 9% previously. And otherwise, not much really was going on. At 2 p.m. today, we've got Christine Lagarde speaking in Europe. And apart from that, there isn't really much data out. So it's a very quiet day after the prolonged Thanksgiving weekend in the US. But we do have at, I believe, 1:30 p.m. the new home sales out also, and later on the Dallas Manufacturing Index. But all eyes are really riveted on Thursday's Fed preferred inflation gauge, which is the PCE price index. So that is the important one for this week to look out for. And in the meantime, what we're seeing is very little trading as the Thanksgiving weekend, which started last Thursday, basically led to low volume trading globally. And if we look at the FTSE 100 today, we can see here that last week it's traded below this orange line here, the 55-day simply moving average at 7,505 for the whole week, in a very low volume, low volatility trading range of less than 100 points. So not much going on here with regards to the FTSE 100. Same story as last week, provided we stay above last Tuesday's low at 7,446. We remain within this upward trending channel and may actually take out last Friday's high. That is the Friday from 2 weeks ago, actually, at 7,516, in which case we could then test the current November high at 7,535. And above there, we've got the red line, which is another potential upside target at 7,567. But basically not much going on here. And I wouldn't be surprised if today we were to continue to basically trade in a low volatility sideways trading range, as Cyber Monday in not just the US may lead to further low volatility trading. In Germany, the DAX 40 futures contract, and here this is the actual index, the stock index itself, is also trading in very low volatility, as you can see here. Not much going on. Very small candles seen here since last week, as you can see here. Very little intraday price movements of just about 100 points or so. And we can see that today we're consolidating after those slightly weaker than expected Asian markets earlier this morning closing in the negative territory. So not much going on here. If we were to take out Friday's high at 16,047, then we could actually head back up again towards the late June and mid-July highs between 16,187 and 16,211. This would be the next upside target area. But as you can see here at the moment, we are struggling in the target and resistance area made up of the late August and September highs between 15,992 highs at the moment. Again, very small candles here, very little volatility, not much going on. So for the bulls to remain in control from a medium-term perspective, what I would like to see is a rise above last week's high at 4,569 on this daily financial bet. And that could then take us up towards the late July high at 4,607. But not much really going on there as well. The US dollar continues to slide, and the beneficiaries of this are the euro and the British pound, as well as the Japanese yen. And let's just have a look at these and start off, first of all, with the euro against the US dollar. We can see here euro dollar continuing to advance, and last week it rallied to 109.65, which was retested earlier this morning, but so far caps the upside. And this high would need to be taken out for us to be able to head back up again towards the late June high at 110.12. And then also above there, we've got the 10th of August high at 110.65. So the 110 area very much remains in play, but short term, we are finding it difficult to rise above there. And the upside momentum should remain in place whilst we stay above the last reaction, though, let's just say a low on the daily candlestick chart, which is below the one to its left and to its right. And that was made on Wednesday at 10,853. So basically, as long as we stay above 10,853 on this daily financial bet, the upside remains very much intact, and euro dollar could head towards the 110 area perhaps later this week. The story is quite similar with regards to the British pound against the US dollar. You can see here cable also heading upwards and now testing from a technical perspective, quite interestingly, the upper channel uptrend resistance line here at 126.27, which so far is capping the upside. Now, if that were to be taken out, we could then be heading up again towards the late August high at 127.46 here. And above there, we've got the 128.19 high from the 10th of August, as well as a potential upside target. And here, this bullish view will remain intact, provided we stay above the red line here, the 200-day simple moving average, and also Wednesday's low. And that was made at 124.50. And the 200-day simple moving average 124.59. So provided we stay above that area, further upside is also in store for the British pound against the US dollar. Now, looking at Japan, and this is kind of interesting also from a technical perspective. You can see here dollar yen had a tremendous uptrend because of the interest rate differential between US interest rates and the still very dovish central bank policy, monetary policy by the Japanese central bank. And we rose all the way from our mid-July low, 138 yen and 08 sen to 151 yen, 91 sen, a multi-decade high, before coming off. And last week dropping to 147.16. Now, since then, we actually bounced back up again. But at the moment, you can see here, we're trading around this orange line, the 55-day simple moving average, at 149 yen and 42 sen. Not much going on here. Again, low volume, low volatility trading on Cyber Monday. And for the bulls to reassert themselves, we would have to rise above Wednesday's high at 149.75, in which case we could then target the early October high at 150.16. And above there, we've got another potential short-term upside target at 150.78, the late October high made on the 26th of October. The weakening US dollar has helped some commodities to rise, such as gold. But before I have a look at the gold price, I'd like to mention what's going on with regards to the oil price. And you can see here WTI falling ahead of this postponed meeting by OPEC Plus, which was supposed to take place this weekend, is now taking place on Thursday, as the rumors are that perhaps some of the OPEC Plus members are not in line with regards to future supply cuts. And we are, of course, aware that Saudi Arabia has got its own voluntary supply cut of 1 million barrels a day, and Russia has its supply cut of 300,000 barrels a day, which are still both in place. But OPEC Plus was discussing cutting output further. But we'll have to see whether that will actually be the case on Thursday or not. But ahead of that, market participants are slightly worried about what might happen in the future. But they don't seem to expect further supply cuts at the moment, since the price of oil is actually coming down. So we have ample supply, less demand. Also last week, we had EIA data out of the US, which showed that the stockpiles were very high. And we can see here the price of oil is just drifting lower towards last Wednesday's low at $73.83, which was made intraday on the announcement that the OPEC Plus meeting date had been postponed to this Thursday. Now, below that low, we have the current November low at $72.38 per barrel. That is also still being targeted and will remain in play, provided we stay below the October to November downtrend line, and also below the red line here, the 200-day simple moving average, and the mid-November high at $79.66. So provided we stay below there, further downside seems to be in store for the oil price going forward. Now, the weaker dollar I mentioned did have a positive impact on the gold price, though, and you can see here that we earlier this morning rose to $2,018, but that's already out of date now. We're currently, oh no, it is still $2,018, but we're currently still heading higher again with regards to the oil price on that lower US dollar. And what is interesting here is that we are now trading at levels last seen back in May of this year. You may remember that in May of this year, we had a high which was made at $2,082. And right now, if we were to close above the $2,009 October high, which looks pretty probable today, then from a technical perspective, we should enter a new equilibrium. And that is to say, we could retest the 2020, 2022, and 2023 highs between $2,070, I should say, sorry, and $2,082. So that would be the next technical upside target area for the gold price. And you can see here that we are on track for our third consecutive week of gains, having seen very strong gains at the beginning of October, take us all the way up to $2,009, which at the moment is the critical resistance area to look out for with regards to the gold price. But as I've just said, we are currently trading above there. So further upside looks to be in store with regards to the gold price as well. Now, another commodity that I find kind of interesting is the price of natural gas, that is to say US natural gas, which keeps on drifting lower. As you can see here, in mid-November, we fell through the August to November uptrend line, and then also through our 10th of November low at $3.12. And since then have fallen all the way down towards the $2.87 area at the moment. And below there, we have as a potential downside target the mid-September low here at $2.79. And then also, if you look at the red line here, the 200-day simple moving average at $2.70. So that is, for me, the technical downside target for US natural gas prices. And these will remain, from a technical perspective, in play, provided we stay above the last reaction high. That is to say, the high made on Friday of last week at $3.07. Thank you very much for watching Charting Markets with me, Axel Rudolph. Please feel free to follow me in X. My handle is @AxelR_IG.